I am super excited to have Matt Allen here with North American Savings Bank here with us tonight. And we are going to be talking all about how to leverage funds in your IRA through non-recourse lending and ultimately continue to grow your IRA through leveraging those funds. So before we get started, I do just have a couple of quick slides for you guys, kind of as we let people get signed on here. For those of you who do not know me, my name is Haley Gant. I'm one of our IRA specialists here at Quest, and I work in our marketing department along with several other awesome ladies who we help to put on all of these events for you guys, bring in different guest speakers, and continue to provide the best education that we can, even though right now it is currently all still online. So in tonight's quick little presentation that I have for you, I'm going to let you guys know a little bit about what we do at Quest, how we can help you, and my personal favorite are different upcoming events and promotions that we have going on right now. So just a quick little commercial about us. Who is Quest? We are a self-directed IRA custodian. We're based out of Houston, Texas, and we have offices in Houston, Austin, and Dallas. Houston is our corporate headquarters, but we do have clients pretty much all across the country. We do operate in all 50 states. And we basically specialize in teaching investors how to utilize their old 401ks or IRAs that might not be doing much right now, and really truly teaching you guys how to diversify your retirement investments, how to invest your IRA into privately held assets such as real estate, notes, private placements. But not only that, we want you to do it right. We want you guys to get the right education. We bring in a lot of different professionals to teach about their expertise. And that's something that really sets Quest apart. We understand this is a relationship business, and it's always great to continue learning. So we really enjoy putting on these events for all of you guys out there. We're a pretty good sized company, about $2 billion in assets under management. That is all alternative assets like real estate and notes, things like that, that our clients choose to hold in their IRAs with us. And last but not least, the most important part of this slide here is our disclaimer. Please be aware that we give a lot of education, but Quest does not provide tax, legal, or investment advice. We bring in a lot of different guest speakers, but we definitely encourage you guys to always do your own due diligence before entering into investments and make sure that you're taking the time to structure things properly. Especially when you're dealing with your IRA, you've probably taken a long time to save up this money over the course of your lifetime. You want to make sure that you are doing all the proper due diligence before you enter into investments, and we really cannot stress that enough. Now, self-directed IRAs, that's exactly what we do here at Quest, but to be completely honest, there's no legal distinction between the IRAs that we hold at Quest and an IRA that you have at any other custodian. The only difference is the types of assets that our clients choose to invest in when they hold their IRAs at Quest. Now, I'm going to kind of breeze through these slides because personally, we have a lot of awesome events coming up, but what I want to get across here is to reach out to us, set up a free consultation with an IRA specialist if you have questions about how to move funds over, the process, the timeframes, the different types of accounts that you should be self-directing and making contributions to for both you and your family members. Reach out to an IRA specialist. We really enjoy working with you guys one-on-one, helping you learn about how this works and the best ways to utilize it. And so reach out to us, but I'm going to kind of move right past that so we can get into our upcoming events that we have. Now, we have a lot of different types of assets that you can hold in your IRA at Quest. Tonight, we are going to focus on real estate. And not only owning real estate in your IRA, but the ability to leverage those funds and actually get a loan to your IRA account to be able to purchase more real estate assets. So lots of great ways that you can self-direct your IRA and kind of choose what types of investments go in there. And I hope that you guys enjoy that tonight. But this class is just one of many different classes that we host at Quest. This presentation, as well as every other presentation that we give, is available to rewatch on our YouTube channel. We have worked very hard throughout this past year to grow our YouTube channel. YouTube is a great resource if you guys aren't using it out there. I don't even have cable. I watch YouTube almost every night. But we've got a lot of great videos on there. all of our recent classes, as well as shorter educational pre-recorded videos that we are posting every single week. So do us a favor, go follow us on YouTube. You can probably see those links popping up now there in the Zoom chat. And if you have questions about our events, give us a call, send us an email. On our website, you can find more articles, you can find more videos, and you can even chat live with an IRA specialist right there through our website. Now, my personal favorite event that we have on this screen, at least, is the virtual networking happy hours. If you guys are looking to network with other real estate investors from the comfort of your own home, be sure to join us on the first and third Wednesday of every single month. I actually personally host this happy hour. It's a lot of fun. We've been doing it for about 6 or 7 months now. And every single happy hour, we get about 50 to 70 active investors from across the US that are looking for deals. They're looking for people to network with, looking to partner up and, do some big things together. So be sure to join us at those happy hours. Those are a lot of fun. And again, those are on the first and third Wednesday of every single month. Now, most important event that we have coming up, and guys, I know this is a lot. We give a lot of education. Almost all of our education is almost always free, except for just a couple of events that we do each year, and they're a bit of a larger scale production. Questcon Live is a full 2-day online conference, and this edition of Questcon will be all about private lending, whether it's using IRA funds, whether you're looking to raise capital from other people for private lending for your own deals. Questcon Live will have about 20 different guest speakers over the course of 2 days, and it actually has its own exclusive virtual happy hour for all of the ticket holders to the virtual event. So be sure to join us for Questcon. Tickets are in pre-sales right now. That actually ends on Monday, March 15th. So be sure to get your tickets before prices go up. This is probably going to be our biggest Questcon yet. It is the 3rd edition of this event that we've hosted since the beginning of 2020. So be sure to join us. This will be a really great event, 20 different guest speakers, and we work really hard to put on those large events for you guys. Now, I know in these events, we do get a lot of you out there that are already our clients. So, we do a lot of promotions for new accounts, things like that. But in the beginning of this year, we have actually revamped our referral program. So this is something that a lot of people have been asking us about, and it's really starting to take off. So with that, we have decided to double the rewards for the entire month of March. If you refer someone to Quest and they open up an account, they will get a $50 discount on their account opening fee, and you will also get a $50 credit to your account as well. Not only that, but there is no limit to the number of people that you can refer over to Quest. So you could definitely get a lot of credits here if you're telling your friends about this. Let them know how awesome we are, and that we have a lot of resources. We can help them get started and point them in the right direction. In order to receive this credit, please be sure that they use the promo code Double Rewards on their application and that they put your name on there as well, so we know who to give that second credit to. So that's really awesome. We have that going on for the entire month of March. And I know that was a lot. This is my last slide that I have for you. It's how to reach out to us. This QR code right here, in today's day and age, I know we all love QR codes. This is how you can schedule a consultation with an IRA specialist very easily in under about 30 seconds. Not only that, but we are very easy to get a hold of here at Quest. We really pride ourselves on that. Not only can you get a hold of us quickly, but you're going to get high quality information whenever you reach out to us as well. So give us a call, send us an email, chat live with an IRA specialist directly through our website during our business hours. And that's all I have for you guys. Thank you for listening to that. Let me stop sharing my screen just really quickly. Stop share. All right. And Matt Allen, I am so excited to have you here tonight. Non-recourse lending in IRAs is such a popular topic that we hear of among many IRA investors across the US. So if you guys have questions throughout the presentation, be sure to send them to the Q&A box, and I will come back out at the end and we will be getting them answered for you. So Matt, thank you so much for joining us tonight. Go ahead and take it away.
Thanks, Haley. Appreciate the introduction, and always enjoy the new norm of Zoom calls, but looking forward to the live events coming up. And you have some this year, and that's exciting that we'll get back to where we once were. So again, thank you for joining us on a Tuesday evening, and hoping you'll learn some new things about self-directed IRA investing and then purchasing real estate with your account. And also, how can you leverage that purchase to increase your gains? So as I take you through the slideshow, I'll go and get into the particulars of what everything means, how to do it efficiently, how to do it correctly, and then you can walk away and hopefully have some ammo to go out and find some deals. And if it is your first time investing with the self-directed IRA, you have that opportunity to leverage the purchase. And to give you a little bit of a background of North American Savings Bank, how we actually got involved with this type of transaction. And technically it's called a non-recourse loan, and it is required by the IRS. So we had one of our bank deposit customers come to us back in 2004, and they wanted to purchase 2 duplexes in the Kansas City marketplace in their self-directed account. The only challenge was it had to be a specific type of loan, and they were having trouble finding a non-recourse lender besides a hard money lender or private lender. And if any of you have used either of those resources, they can be extremely expensive, higher interest rate. Typically we'll tack on 1 to 2, 3 points on the transaction. And then the terms, that it might be a short-term loan. So in a lot of cases, it doesn't make sense for a real estate investor. So we saw the opportunity. We spoke to the individual's IRA custodian, ended up closing on those 2 transactions. And then in 2005 was when we launched that program. And that's when I was asked to promote this product nationwide. So I've been involved back, since the inception in 2005. And kind of an overview of my presentation is, what are the advantages of using debt financing to buy real estate within an IRA? How do you get a non-recourse loan? And then what are your typical guidelines and parameters for an IRA non-recourse loan? North American Savings Bank. You may not be familiar with us. We are a mid-sized bank based out of Kansas City, Missouri, as I mentioned. If you've ever applied for a owner-occupied loan, we are one of the top 2 or 3 lenders on LendingTree every year, and then also through Costco's lending program. This year has been our busiest year, I should say, the last 12 months with all the refinances going on. We've funded over $4 billion in residential loans. And then we have some niche products. Our portfolio program, where for borrowers that don't quite fit the box for Fannie Mae, Freddie Mac products, we can help them there. And then also what we're going to talk about is our non-recourse loan program. So when you buy real estate within an IRA, if that's the asset class you're looking to purchase, and as Haley mentioned, when you set up a truly self-directed IRA or 401k plan, really your options are unlimited. You can start your own company, start your own bank if you wanted to, buy tax liens. You could also leverage the money, or not leverage money, but lend the money out to other investors, charge a specific interest rate. And then there's also the option of purchasing investment real estate. And that's one of the more popular options. Since so many investors are familiar with real estate also, why not take the opportunity to invest in something that not rely solely on stocks, bonds, and mutual funds through the stock market. So there's 3 options. You can buy that property outright. So you have a $100,000 home. You make an offer, seller accepts, you pay cash with your IRA funds. So then your IRA owns that property free and clear with no lien attached. Excuse me. And then the second option, if there's another individual that has an IRA, or they want to use their personal funds, LLC funds, you could partner with them. So to simplify it, that same $100,000 scenario, you would put $50,000 down from your IRA. The other investor would put $50,000 down, and then you would own that property free and clear. throughout the duration of ownership. Since you have that 50-50 split, all your net proceeds would be divided accordingly. So any rent you would receive from your tenants would go back in. Any expenses that would come out, again, would be divided 50-50. And there's no limit as far as the number of partners you can have. So I believe we've seen up to 6 or 7 individuals, which is completely doable. It does make it a little more challenging on the closing side, getting all the language on the loan documents. Usually requires a manual typewriter. But again, that is an option if you wanted to get some of your friends, allowable family members involved on the transaction. And then the third option, which we'll go into in a majority of this presentation, is using leverage with a non-recourse loan. So if you have that $100,000 property, assuming you don't have all the cash, maybe only $60,000 in your account, you could actually get a loan. And it's really comes down to, the type of transaction has to be non-recourse loan. And to explain that, it involves Publication 590. So IRS.gov, when ERISA was approved back in 1974, it included Publication 590, and it says you can't use your IRA as security for a loan. So when you're signing your closing documents for loans in your personal name, you're typically going to have that personal guarantee. So if the property goes in the default and then foreclosure, that lender can go after your other assets to recover any losses they couldn't recoup from the sale of a home in a foreclosure. But with a non-recourse loan, that eliminates that option for the lender. So the only collateral for the loan is that specific piece of real estate. So it eliminates some of the headaches that could take place if, in that unforeseen situation, property does go into foreclosure. But again, IRS allows for it, but you do have to play within the rules. Most banks don't offer this type of loan. We're one of 2 nationwide lenders I'm aware of. The bigger players out there, Wells, Chase, Bank of America, they just don't get involved in this for a couple reasons. The amount of loans being funded annually probably doesn't make enough sense for them based on, the research and development they'd have to go in to learn about this. And then it's also, they have other portfolio lending is typically not one of their strong suits that they look for. They typically will securitize or hedge loans, where these loans have to be held in the portfolio of the lender. So any loan we make non-recourse, we're going to hold and service that loan for the duration until it's paid off, whether by selling the property or a refinance. So I've explained this in great detail as far as, what a non-recourse loan is, and this is just the highlights. And I imagine you'll have access to this PowerPoint afterwards if you want to look at this more detail. So really the advantages of using debt financing with the self-directed IRA, all those net proceeds go back into that IRA tax-free or tax-deferred. So if you're new to this, you can set up a self-directed Roth IRA or a self-directed traditional IRA. So depending on which option you choose, that's going to determine what kind of tax consequence you would have when those assets are distributed from that account. So again, all the net proceeds go back in the IRA. That's the true benefit of this. Again, if you can, if you're earning 4, 5, 6% with the stock market, you find a nice piece of real estate, earns great rents, you could increase your rate of return, say to 10%. So there's that true benefit. And then leveraging allows for larger gains in a retirement account. If you only have that $100,000 in your account, you can only buy one property free and clear at $100,000. Where you use leverage, you have the opportunity to purchase 2, 3, 4 different pieces of real estate. And then diversification, hit on this a little bit earlier. You're here for a reason. You want to diversify your portfolio. and you're looking at tangible assets possibly instead of equities. And this is something that's caught your eye. You may have heard about it from another investor. Came across Quest Trust website. However you found out about this, you're here, you want to learn more, and this is a great way to get started. So eligibility for a non-recourse loan. Anyone that has roughly 30–40% of that purchase price in their IRA LLC has the opportunity to buy rental properties with a non-recourse account. So those funds do come out of your account on the closing table. So let's say, again, to keep it simple, $100,000 purchase, 40% down, that $40,000 at the closing table is going to come out of your account and go towards the purchase of an asset. Now, it's not considered a distribution of funds. You're not paying taxes on that, but it's going, essentially look at it, instead of buying $40,000 worth of Apple stock, it's going towards that single family home. Now, the reason a lender is going to require more money down, because of that non-recourse component, it does make a difference for a lender. A lot of lenders aren't comfortable with that, but to help lower the risk, they want a little more skin in the game, so to speak. So we are typically a 1 to 4 unit lender for this type of product. Single family homes, 30–40% down. Your multifamily condos or 2 to 4 units, we're going to see at least 40% down for a couple of reasons. A single family home is easier for a lender to sell on the market if they take it back, where we take back a 4 unit property, there's not going to be as many buyers looking for that type of opportunity. So we may hold on to it longer. We may not get the price we think we should. So there's a plethora of reasons of why we do require more money down for your non-single family homes. New construction, that's also an option. The only challenge you're going to have if you're looking to build in your a single family home for your retirement plan, you're going to have to find a non-recourse construction lender. We don't actually get involved with that piece of it. We would provide the end loan. So if you get a builder, say, that will fund the actual construction of the home, then we could go in and pay that loan off once it is complete. So it's perfectly doable. Just another layer, you would have to come up with that, either a non-recourse loan or have the builder provide that on the front end. With this type of transaction, there are some differences, and this is really where you need to pay attention when you're making that first offer. It's best to do it correct up front and having to retract and redraft documents, including the purchase contract. So everything would be titled in the name of the IRA if that's the path you go down, versus say a solo 401k or IRA LLC. So if I had a self-directed account set up with trust, like Quest Trust, it would be Quest Trust Company for benefit of Matt Allen IRA. So that's how the title will read. That's how the buyer's name will read on the purchase contract, and it will remain as such for the duration of ownership. So if you have multiple buyers, they're all going to be set up in a similar manner on that purchase contract. So again, make sure you're setting that up correctly. Quest will help you. But I just know over years experience, we've had some made it in their personal name. Then you do have to go back, and it's just cleaner to clean it up instead of making an addendum to the purchase contract. We do lend in all 50 states. Not sure what your particular area is, the marketplace that you focus on. There are some areas that we're going to look at a little bit closer. New York is one that we typically don't lend in. And the reason for some of the states where we might either require more money down or pass on certain situations are, if they're judicial states, foreclosures can drag out for years. We have a bad taste in our mouth with some loans in New York that have, dragged out for 6–7+ years. That's something that we can discuss on the front end before you actually make an offer. you have the option to purchase real estate outside the U.S. I would say that you really need to make sure you have all your ducks in a row. Not aware of any non-recourse lenders that go outside the U.S. And I know Quest has dealt with some, say the Virgin Islands or areas that people have an interest in. But we aren't familiar with the appraisers down there, title companies. So there's a lot of unknowns that we do stick to the United States only. Time frame for this type of loan, due to the fact that there's multiple signers, it's a little bit different. Just one additional step. So let's assume you're in Texas, you're buying a piece of real estate in Arizona. Quest is also in Texas, and then we're in Kansas City, Missouri. So you make that offer, a property in Arizona, everything goes through, the loan documents get drafted. We send them to the title company in Arizona. They first send them to you, overnight them, or via email. You're going to sign them, execute them as read and approve. We want to make sure that you understand everything. And then those will get forwarded over to Quest, where they're actually going to execute the documents. And it's really their signature that's required since your IRA is owning this property. They will execute the documents, and then in turn, they're going to send them back to the title company in Arizona. It will then fund, and then you would own that piece of real estate. So you can see there's an extra possibly 3 to 4 days. So making an offer, I would push it out. If 30 days is the going rate or the going timeline, 35 days would give you some extra breathing room if necessary. There's other variables involved right now. Due to all the refinances, it's taking some borrowers up to 90, 120 days to actually fund a refinance. You've got the appraisers that are extremely busy. Title companies are maxed out. So just a recommendation, talk to your real estate agent, find out what's going on in that marketplace so you don't give the seller expectations that you can get this done within 20 days when really that's not feasible due to the workload everybody's going through right now. With rates starting to creep up a little bit, things may move out of that bottleneck. I expect them to be relatively low the remainder of the year, but there's not that same opportunity for most owners to refinance. They've either already done so or with the rates going up slightly, not everyone is enticed to jump in. So type of loan programs available. We have a 10-year ARM, 10, 15, 20-year fixed option. They are principal and interest payments. We don't offer an interest-only option. We do escrow for taxes and insurance. So all of your expenses must come from that self-directed IRA. That includes your real estate taxes, your hazard insurance. If there's HOA dues associated with a property, say a condo in Arizona, and then any improvements to the property or repairs. So you have that leaky roof, or maybe a hole in your drywall. You do have to pay from the account to fix that up. You can't dip into your personal pocket to make those improvements. I guess, and back to that, as far as interest rates, you're probably aware they are going to be higher than an owner-occupied home. Right now, they're around 5.5 to 6% in that range. So, they're not going to be conforming rates, but they're also not private lender hard money rates. We're very competitive with this type of product nationwide. So those are going to be your options. And again, an ARMs we prefer, we have that, and also a fixed product. Now, if you're on this call, you purchased a home 5 years ago, paid cash for it, didn't know you could get a loan. You can also apply for what's called a cash out refinance. So that same $100,000 scenario, well, let's say a $200,000 home, that's the value of it. and you would like $100,000, leaving another $100,000 equity. So that $100,000 would go back into your self-directed IRA at the closing table. So that's going to be liquid cash in your account. So you can either do make improvements on your current piece of real estate, or you can go out and purchase other assets. So a lot of investors, as I mentioned, when they originally purchased that piece of investment property, didn't realize that was an option. So refinance is something, again, to help build up your investment real estate portfolio. And I will mention one thing, as far as qualifying for this type of loan, you're used to all the red tape of applying what's your income, your credit score, your assets, where because it's non-recourse, we aren't looking at you individually. So we're not asking if you're employed. We really don't care if you're employed. It's strictly based on the property. So when we do pull credit from one of the 3 credit bureaus, but we're only doing that just to get a taste for, do you have any outstanding tax liens, anything we should be aware of that could affect the lender in the case of a foreclosure. So it really is based on 3 things. One, the collateral is the property rentable, livable condition. 2, the cash flow for that property. Does it have positive cash flow? And then the third thing we look for is the reserves for that account. As I mentioned earlier, you have to have enough funds in your account to cover all expenses. We want to make sure you have enough left over. Let's say, you lose your tenant and you're unable to get a new one for 2 to 3 months, still have to make that mortgage payment, and it has to come out of your account. So you need to have some reserves built up in liquid funds. That can be stocks, bonds, cash, something that you can access relatively quickly in an emergency or unforeseen situation. Property eligibility. So these are the type of properties we typically look for. Single family homes, warrantable condos are perfectly fine. PUDs, townhomes, duplexes, fourplexes, multifamily, we consider 5+ units. We don't see a ton of those. One, there's not as many buyers for that. And 2, typically those are going to be in a higher price point. So buying $100 or $1 million 5-unit property, you have to have a pretty healthy IRA account to put, say, $400,000, $500,000 down on that 5-unit property. But again, it's an option, something that we'll definitely take a look at. More importantly, ineligible properties, just bring this to your attention so you're not spinning your wheels looking for specific type of unique property that not only with NASB, but with another non-recourse lender wouldn't be able to help you with a loan. Typically, it's going to be vacant land. Well, if you think about that, you don't have a tenant in place. You could actually have income through crops, but typically lenders don't want to get involved with that. Large acreage, manufactured homes, hotels, co-ops, timeshares, the list is right there. But typically unique, it's typically something that we will pass on. But again, not to say that you can't buy these. I know a lot of investors will buy storage units, and then they will rent those out, and all that money goes back into their self-directed account on a monthly basis, and it's great income for them. But they most likely paid cash for it or got involved with the hard money private lender. Now I'm going to run through a specific scenario and give you an idea of what it would involve as far as how you calculate the cash flow. As I mentioned, that's one of the 3 things that's very important for qualification on a non-recourse loan. We want to make sure that you have at least 20% positive cash flow on a single family home, and then at least 25% for your condos and 2 to 4 unit properties, and also multifamily 5+ units. So to give you a scenario, say you make an offer on a $180,000 home. The going market rents in that area are $1,600 a month. We factor in a 6% vacancy factor. You've got your real estate taxes, your hazard insurance, a maintenance of $420 a year that we calculate, and then a management fee of 6%. Property manager, we typically see most investors using one. And 6% might be a little bit on the light side, probably closer to an 8 to 10% in most marketplaces. But again, we're factoring that in for a calculation. It's going to give you an NOI, a net operating income of around $14,000 a year. So then if we move to the next slide, let's assume you have a $108,000 loan at 5.75 interest rate, your annual principal and interest payment, roughly $9,000 a year. So then when you divide the net operating income by the annual P&I, it's going to give you a 1.55 DSCR. So those seasoned investors out there, if you're familiar with the debt service coverage ratio, it's what's typically used to calculate on a particular unit. And 1.55 would mean 55% positive cash flow. 1.0 is a break-even mark. So I mentioned we're looking for at least 20% on the previous slide. So this one would exceed what our minimum requirements are. So this is one we would look at and say, yeah, this one would qualify. So we'd recommend you go ahead and make an offer on it. And typically what happens with the scenario, if you have a property you're wanting to make an offer on, we recommend you reach out, call us direct. We have a one-page form you fill out. You send over all the information on the property. We send it to our loan committee same day, get a response. If you need a pre-approval letter at that time, we can supply one. But it's just a real simple way of getting that specific property qualified, calculating the debt service coverage ratio, as I mentioned, looking at the reserves based on what you put on that form for us. And we are ordering a full appraisal. So we'll get a full appraisal with rent comps. So there doesn't have to be a lease in place. It's always helpful if that's the case. A lot of times, depending on the state, that can't transfer over to a new owner. But the rent comps will give us a good indication of what you can expect. So, if you're expecting $1,600 a month in rent and the appraiser indicates it's really closer to $1,000, that's a red flag for us that, your debt service is below 1% now, or below 1.0. It's not going to qualify on our end, but also, it would put yourself in a situation you may not want to be in if you're expecting higher rent. So, it protects both buyer and the lender. Rural areas, we sometimes will lend on. Prices are, roughly in the $500–600 range. And listed here are some of our other fees associated with the loan. Again, taxes and insurance, we do escrow for those. As I stated, on our website, we use IRA-lending.com. That's where you can find more information about this type of loan, some FAQ pages. But this is a list of items we'll need. Basically, our loan app, purchase contract, and then verification of your funds in your account. That's the only asset we're going to look at. We're going to make sure you have enough for the down payment and the reserves. We also have a book available. That if you send myself, or I guess the email address there, IRA-lending@NASB.com, more than happy to send you a digital copy version of the book. And then also we have a hard copy version available on our website. If you're new to this, we think it's a good resource, explains how do you set up account, how do you get a non-recourse loan, what are the prohibited transactions you should be aware of, and then also, tax consequences. We have an accountant that wrote a couple of chapters on it, so it's a really good, as I mentioned, resource. And again, you can have a free copy if you send us an email. And again, IRALane.com, or reach out to one of our dedicated loan officers. Our staff seasoned for 10 plus years, so have a lot of experience with this, and more than happy to answer any questions. Haley, if you want to jump back on, and then there you are.
Yeah.
And then if you have any questions.
Oh, yes, we have a lot of questions coming in, and I'd actually prepared some myself as well. But one of the most common questions that we are getting, and we can always expect this when we are talking about leveraging IRAs, is about UBIT, or unrelated business income tax. Kind of the common consensus between several of these UBIT questions is, how does UBIT apply? Is it still worth it? Does it end up being really high? I'm kind of our in-house UBIT nerd, but Matt, I'd love to hear what you have to say about that, and then I'll kind of chime in as well.
Sure, and I guess I will preface saying that I'm not a CPA or tax accountant, don't offer any financial advice as it comes to this topic. There is the UBIT tax you mentioned that can apply on purchases that are leveraged. So if you don't use leverage, it doesn't apply. It's easy. Don't have to worry about it. Now, if you get involved with a non-recourse loan, there are some cases where it does apply. Now, I will say that the cases we've seen, it's typically minimal or none at all. But again, you probably have more experience with that yourself, Haley. I always revert to our book where we have 2 chapters written specifically on this by a CPA. So it answers all the questions, and it gives a comparison of buying it in your personal name versus buying it in your self-directed account, and factors in the UBIT that could apply and what actually has a greater rate of return. So I guess I'll leave it at that. I don't want to dive into it too much, but that's what I would recommend.
Yeah, and I'm actually gonna get on that email list myself. I want to read those couple of chapters of that book because at Quest we talk about UBIT a lot, but we really talk about it conceptually. Since we're not CPAs, there's only so far we can get into the conversation before it hits the numbers, and we can't get that specific. But when you are debt leveraging your funds in your IRA to purchase real estate, UBIT is definitely something that you do want to be aware of. Kind of like Matt was saying, a lot of times it does end up being pretty minimal. But to kind of, sum up UBIT in, hopefully just a couple of minutes, basically based on the percentage that is debt leveraged. So say the property is 50% debt leveraged, 50% of the income back to the IRA will become subject to UBIT, or unrelated business income tax. Now, once your IRA incurs this tax, that your IRA actually has to file its own tax return. It's called a 990T. But on this 990T, where you kind of file your UBIT, you can actually use the normal sort of write-offs like depreciation, expenses. Get with a CPA who's knowledgeable about UBIT to do this for you. But you can use those normal sort of write-offs to minimize the tax that your IRA ends up paying. So it's only a tax on a portion of the profits based on what is debt leveraged. And then you can use the normal sort of write-offs to minimize the UBIT that your IRA ends up paying. Now, if you're doing multifamily investments, if you're investing into like an ongoing trade or business, it's definitely a little bit of a deeper conversation there. But if you guys have questions about UBIT, we also have a few great resources on our YouTube channel. If you search Adam Barr on our YouTube channel, I've actually done several like 45-minute interviews with him, and he gets very deep in his CPA lingo there. So hopefully that's enough about UBIT. If you guys have more questions about that, reach out to us directly at Quest. That way we can get some of the other questions answered here. So I do like this one. Joseph wants to know, does NASB finance renovation costs for value add projects? Example, a 3-unit multifamily, purchase price $300,000, renovation $100,000. What would that like loan to cost be?
We don't get involved with, improvement loan or rehab loan, different names you can call it. That's going to be more of a hard money lender, private lender, somebody that's, in a lot of cases are looking to improve it and then sell the property, where we're looking for more that long-term investor. But again, we want to see the piece of real estate in rentable, livable condition at the time we lend on it. So if it is distressed and not in that condition, we wouldn't be able to get involved until it is, brought up to code or whatever you'd like to call it. So again, I would look locally for a lender that would offer that kind of solution.
Yes, definitely. And that kind of brings me into one of my questions that I had. We see a lot of people, because you guys have a very specific set of criteria for what you will lend on. Now, we've actually seen a lot of people go through private lenders for non-recourse lending. If I say I'm looking to buy a property with my IRA, it's not a property that NASB will loan on. So I may be looking to get a non-recourse loan from a private lender. Do you have any advice there? Are there certain things we should be looking for? Is there certain language we should have in those documents? Kind of walk us through a little bit about that.
Sure. Yeah. So it depends on who you're using as a resource. If you're using your neighbor, you really need to check all your boxes and get a real estate attorney involved to draft those documents. I'd still recommend that. Because there does have to be specific language in there that references non-recourse. So you don't want to put your IRA at risk if you actually take out a loan that would be considered recourse. So, that would be my first concern. And then also just dealing with somebody on a professional level that understands the process, that you can rely on. So I would start with, your realtors in the area, real estate attorneys, CPAs that are versed in this topic. They may have those good resources, and just be careful who you use. And if you're borrowing money from somebody, you always want to make sure they're a solid financial source.
Yes, definitely. And if you have more questions about that, reach out to us here at Quest. We do a lot of education over raising private capital. You mentioned something about like cash out refinancing, and that's interesting. Do a lot of people end up refinancing their non-recourse loans? If they do, what is this process? Is that something you see pretty commonly?
Yeah, I would say we typically don't see what you'd call rate term refinance, where let's say somebody purchased a property 3 years ago with a private lender and they want to refinance it to better terms. Typically, we'll have a borrower or account holder that comes to us and they own that property free and clear. They see another opportunity, so they take the equity out, put that into their IRA as cash or 401k plan, and again, use it to buy other assets. So it's pretty common. I would say maybe 20% of our loans that we provide non-recourse are considered a cash out refinance.
Nice. That's interesting. And this may be a dumb question, but if someone's doing a cash out refinance, are the particulars of the property that you guys look at the same? Or are you looking at the property that they've done the cash out refinance on? How does that work? Which property are you more so looking at there?
Yeah, so we're only looking at the piece of real estate they already own in their IRA. So if they own that single family home in Arizona worth $200,000, we're only getting the appraisal on that property. We're only evaluating that particular scenario. So then that $100,000 cash would go back in the IRA on that Arizona home. What they do with it after the fact, we don't get involved with, unless they are looking to get another piece of real estate. Then we could get involved with that too, providing a loan on a second home, or they'd use that cash for the down payment on the second.
Awesome. Good information. Let's see. I think we already answered that question. Let's see. If you partner multiple IRAs together, can you still get a non-recourse loan if there's multiple IRAs in on the deal?
Yeah, that's perfectly fine. You have to designate on the front end what percentage ownership each account holder has. It can be any number, it can be a 50-50 split, it can be a 60-40, but once you've set that or establish it, that remains for the duration. So you have a 60-40 split, just know that 60% of the tenants rent will go back into one account, 40% in the other. There's no limit, I mentioned that earlier, to the number of accounts you can have on title. The more you have, though, the more complicated it gets, keeping all your accounting involved. Some investors prefer a entity such as an IRA LLC. If you have multiple account holders involved, it makes it a little cleaner. We're not recommending either option, just that's what some look to. If you have, your son, daughter, and another investor involved, you can kind of push things together into one entity.
Mm-hmm. Awesome. And do you ever see people partner their IRA funds with non-IRA funds to get the non-recourse loan? Does that change anything?
Occasionally we'll have a account holder come to us and they want to partner their IRA funds with another investor's personal funds, which we will set up. We do require that the IRA account holder has, I guess that the ownership is at least majority 50%, 51% in a self-directed account. We designed this program specifically for retirement plans, so we don't lend non-recourse to individuals. So that's the first criteria. If you have an individual who wants to borrow non-recourse with their IRA and their personal funds, I would revert to Quest Trust. That can be a little more complicated situation, and let your custodian guide you down the right path. Make sure you're not doing anything that the IRS would frown upon that could, constitute a tax consequence. So.
A big tax consequence at that.
Yeah.
And I'm glad you mentioned that, because that's something that we always talk about, because you can certainly partner your IRA with non-IRA funds, but it just gets a little bit more tricky versus when there's multiple IRAs partnered together. Because when there's multiple IRAs partnered together, at the end of the day, all of the money is still coming in and out of Quest. It's not having to come partially from you and partially from your IRA. Especially if you are a new IRA investor, it's not really something I would personally recommend, just because it can get a little messy and it becomes a little easier to accidentally get yourself into something that might be prohibited there. So I'm glad you answered that there. We just have a few more questions here, but definitely a few that I want to get to. You mentioned something about you can get a pre-qualification letter. So how do I get pre-qualified to do a non-recourse loan? What information do you guys look at there?
Yeah, it's pretty simple. You would reach out to us via phone or through our website. We have a one-page form you complete, real basic information on the property only. We're not asking for any of your, I would say, confidential, security, social security number, date of birth, private information. It's really the property address, expected rents, real estate taxes, hazard insurance, and then also the account balance of your IRA that would be involved in the transaction. So we then will push that to our loan committee. They usually respond, within 3 to 4 hours, giving a thumbs up, thumbs down, what the loan amount we would lend on, and then that's when we could provide a pre-approval letter. We just draft that for you, send it off, sign it, so you would have that to present to the seller when you make your offer, which we all know having a pre-approval letter gives you a one-up on buyers that haven't already taken that step. So a lot of cases it will help you. So we welcome that. We would prefer that you come to us on the front end instead of making an offer, getting it accepted, come to us, and then for whatever reason, it doesn't fit our lending parameters, and then, you have to backtrack and look for another option or a different piece of real estate.
Yes. And guys, it's always better to reach out to either us at Quest or Matt at North American Savings Bank, no matter what you're needing. Reach out to us first, start the conversation, go ahead and get the ball rolling, get your ducks in a row. That way, once that property does come across your plate, you're not waiting for things on the back end that you really could have probably done ahead of time. Matt, this has been great. I think I'm going to cut the questions off here. There's a few really specific ones that have come through about terms and things like that. Guys, if for any reason we did not get to your question tonight, be sure to email Matt at iralending@nasb.com, and you'll also get a free copy of their book. Answer all of those fun UBIT questions that you guys have. But Matt, before we sign off for the night, do you have any last kind of closing thoughts or piece of advice that you would like to leave our audience with?
Sure. I mean, the number one advice is, do your homework. You've taken that first step by being here tonight. Talk to investors that have been involved with this type of transaction. Learn from them. Learn from their mistakes or what were the obstacles. Talk to real estate attorneys, CPAs in the marketplace. Just make sure you have everything known up front. Learn about prohibited transactions. That's in the book. Just what you can and can't do. So you don't put yourself at risk to have that tax consequence. And then when you're ready, make that offer, buy your first piece of real estate. We see a lot of investors that come back for multiple times because they had success on the first one. They want to do it again. Just continue that process.
Mm-hmm. Awesome, Matt. Well, such great information. Thank you so much for joining us tonight. To all of our attendees out there, I hope this helped to kind of give you a clear idea of how it works if you are looking to get a loan to your IRA and leverage those funds to buy real estate. It's definitely a really popular option that we see here at Quest. So Matt, thank you so much for taking time out of your night to join us. To all of our attendees, I hope you enjoyed it. Be sure to send us feedback. Let us know if you have any other questions, and be sure to check out our resources and those links that Sarah has sent. And I hope to see you guys in more of our future webinars. Y'all have a great night.
Thanks, Kelly.
Bye, Matt.